Hi, and welcome back to the Mortgage Broker Broadcast. My guest this week is Jamie Benn. Jamie Benn is a financial advisor at CS Retirement Solutions. Jamie was on the podcast back in May, so early doors. I think he was on episode 6. What I wanted to do, Jamie's on the first podcast he was on, he talked about the reasons why he was moving from being a mortgage broker to full financial advising and become diploma qualified. So what I wanted to do was, at that time back in May, we were starting out on that journey. What I wanted to do was getting back onto the podcast 6 months in to look at where he was at now, share his experience over the last 6 months, what he's learned, what he's been doing, and really just understand where he's at now and what does the future look like for him to become a financial advisor. So welcome back to the podcast, Jamie. How are you?
Yeah, I'm really good, Craig. Thanks again for having me back here.
No, good. I appreciate you coming back on the podcast. And I think we needed to get you, I think we said at the time, we needed to get you back on the podcast and just get an update on where you were at. So I think was it episode 6? It was early days in the podcast. You were one of the first guests, Jamie. Episode 6, it was back in May.
Yeah, no, that's right. It feels like a lifetime ago now with everything that's happened since, doesn't it? But yeah, what is it? 7 months we're coming up to now?
Yeah, 6 months. Yeah, we're just over 6 months, getting closer to 7 months ago.
That's it.
So we're going to have a catch up on the last 7 months of your journey, the last 7 months of what you've been doing with the academy, with the Openwork Academy, and how that's been going. And yeah, just really get to where you're at on your road to the diploma qualified financial advising. So we're not going to talk about football first of all, because I need to let the listeners know, the subscribers know, that you are a very avid, I'm trying to think of a better word to describe you than that, but you are a keen Manchester United fan. So we're not going to talk about
Thank you, mate.
the news at the weekend and stuff like that. We're not even going to cover that. I think it's a bit too raw for you to deal with right now. And by the time this podcast goes out, we record it a couple of days in advance, so you never know. You might have got a new manager by then, mate. Who knows?
That's it. It could even be me at the rate that we're looking at people at the moment. Who knows? I think it's all up in the air. At least we've got a little bit more on the financial services route. I know what's happening in that world. But football's out of the question now in my eyes.
I'm going to ask you one sort of thing, because I can't remember seeing, when I looked at the latest odds on my Sky Bet account, I can't remember seeing Jamie Benn. So I'm thinking now I might put an outside bet on, might get you sort of a few thousand to one and get a requested bet on Sky.
Hey, you never know. After the podcast goes out, we might start seeing a few names just popping up on Bet365 or something. You never know.
Exactly. I've got to ask you the question though. Is there one, as a Manchester United fan and as passionate as you are about football, and like I said, this is my last question on the football situation. We're sat here, this goes out on the Wednesday, so we're sat here a couple of days before that doing the recording, after Ollie was parted ways with Manchester United yesterday. Is there somebody you prefer to have at the reins of Man United? And you can't say yourself and you can't say me, so they're the two things out of the question. Have you got a favourite, Jamie? I've
got somebody I feel like could do well for us, but I don't know whether he'd ever come take the job, which is Joachim Low. I feel like we need an international manager, somebody that's used to having just a team of individuals, in my opinion, and putting them and making them into a team. So he'd probably be my favourite at the time being, just to try get a bit of team spirit back in there and somebody that's got a bit of a track record. But it's a tricky job to be going for at the moment, isn't it? I don't think there's many managers out there that want to give it a shot anymore.
No, I think you're absolutely right. It's just that I think the problem with it is that it's a job that you'd want every boyhood's dream, not everybody, but a lot of people's boyhood dream to manage Manchester United, especially if you're playing. And I saw Peter Schmeichel. I'm a big Formula One fan, and Peter Schmeichel was on the grid at the Qatar Grand Prix at the weekend, and there was. He was asked about the Manchester United job and things like that by Miss Brundle, and he sort of said that you just had far too many managers in just a short space of time. I think that's what he put, but he didn't throw his hat into the ring anyway. It was very dismissive of anything like that. So I think he must be enjoying the Middle Eastern climate and not the sunny skies of Manchester, shall we say.
No, you can't blame him for that one. I was over there this weekend, and it was just as rainy as usual. So I'm sure the players from overseas and the managers are thinking exactly the same thing.
I'm glad you cleared that up. So when you said over there at the weekend, I'm thinking, what, he was at Qatar? No, he wasn't at Qatar. He was in Manchester at the weekend.
Yeah,
oh,
just
well
a little
done,
bit
Jamie.
closer to home. Yeah, a little bit closer to home.
Right, so we'll finish talking about football on that note, and now we've got your favourite tip in the thing. They're going to see the Sky Bet odds sort of closer in terms of for him than now. So, but no, brilliant. So, Jimmy, obviously the idea was to get back on the podcast. You talked about what you were doing back in May, your experiences with the Openwork Academy, what you were looking to do, all the reasons why you were doing it. Just have a recap, first of all, for those people that have not listened to your first podcast that was out, and people, if you haven't listened to that, then probably good to have a listen to that first of all. But just give us a quick recap of what you were doing back in May and what your plans were for the rest of 2021.
Yes, I suppose I'd been a mortgage broker for quite a while by this point. It had always been a bit of a frustration of mine that there was quite a few things you'd see clients about, and you'd start to understand their whole lives and what's going on and what they're hoping to do, their aspirations for the future. And then once you'd sorted the mortgage out, you kind of just send them off to somebody else and go, right, go through all of that again and tell them everything you've told me, and then they'll be able to give you a few hints and tips. And it'd always been something that's just a little bugbear when you're getting to know these people so well. You're asking them to duplicate things when actually you're in a good position at that time to affect everything as well. At that, whether it's remortgage or first mortgage or looking even to pay off a mortgage, you're in a really good position to start affecting change and make some big decisions. So for me, it's been something that has been on my mind for quite a while. How great it would be to start having those holistic conversations, which has been great to get started on and understand the full situation and what it means in the real world. And then since then, we've just been going through the exam process, working with Openwork Academy to get a bit more detail around what we're asking people, what's important from a financial services whole, because you feel like you know everything under the sun being a mortgage broker, and then you get the rest of the world thrown at you as well, and it all comes at you quite quickly, and you go, do you know what, I've got quite a lot to learn in this, which is it's been eye-opening, but it's been a great experience at the same time to start getting all of that under your belt and going from the new boy to feeling a lot more confident with all these things again.
Feeling like the new boy.
That's it. Same as the mortgage world. You come in and you think, oh, yeah, I know everything about all of this banking stuff, and then you start to see all these different criteria, and you go, right, okay, yeah, I know about 5% of what I need to know.
I know, but the thing is, you're doing this for the long term, Jamie. Though, you're going back to, if you think about when you was a broker and started out as a broker, like you said, and you were the new boy then, and quickly wasn't, and then you understood what you needed to do, the processes, how to be a successful mortgage broker, which you then did. Is then going through that again and thinking about, I want to be the financial advisor, and the thing is, because you've gone through the process of being the not knowing in the mortgage broker world, I guess it's like more easy to deal with when you're going through the not knowing financial advising world as well, because like you say, there is a lot, just as much to learn, if not a lot more. There's a lot more regulation, heavily regulated in there. You think that a mortgage broker, you're heavily regulated, then you look at the financial advising, and I see that side of things thinking, wow, that is regulation kind of thing. But for the right reasons. I get why regulation's there, and I get why the learning's there, because the way that somebody sort of talked to me about the other day was because you've got a long-term legacy with these clients, because with a mortgage, obviously it's something they'll have for a couple of years, 5 years on a 5-year fix, 2-year fix. They might come back to you. They should come back to you next time for your remortgage and things like that. But the mortgage, you're reducing your debt, and you're trying to give the better advice to reduce debt. Whereas what you're looking to do is giving their advice to increase their wealth when they need it. So bad advice and getting it wrong when you're looking to increase has a massive effect in terms of the long-term plans if you don't get it right from the start. Whereas with a mortgage, you don't get it right from the start. And this is not sort of in any way being detrimental to any mortgage brokers. I'm not, and you know that I'm not that kind of person, but I think it's just looking at it from my point of view and the conversation I had with somebody about it. And something that they brought up was that it's obviously you're having more of a positive effect with people when you're looking for when you're looking after their pensions and investments and looking at their retirement plans. So you've got to get it right. The pressure's on to get it right even more than what it is as a mortgage broker.
No, you're absolutely right, Craig. I think it's a strange concept when you're looking at the mortgage world, because nobody's as bothered about the mortgage as they are the house that it gets them. Whereas you flip it on its head in financial services, and it's like, well, no, I've saved all this money, or this is my money I've worked really hard to put to one side for my future and for these specific plans. So I want to understand every intricacy of what it is that I'm going to be looking at for my own savings and my own wealth and my own future. Where you hit the nail on the head. The mortgage world is kind of a means to an end a lot of the time. We want to find the cheapest means to an end, but we just want the house at the end of the day. So it's it's a lot more pressure. Let's put it that way, to make sure you get it right first time, for sure.
But do you have more support? Obviously, there's more pressure, but then I'm guessing in terms of support-wise and systems, analytics as well that you have at your fingertips, you have more support to get it right, I'm guessing.
Absolutely, yeah. I mean, certainly for us here, it's been brilliant to have other advisors by the side that have been down these roads before, that you can bounce ideas off and talk about the whats and whys, and like you say, the analytical side, it's brilliant. They've got so many detailed reports as to what's going on and why we're looking at specific changes in portfolios by a percentage or 2%. And for a lot of people that might just be the most boring thing you could have possibly imagined, but when it's your everyday and you're living, breathing this kind of stuff, it's brilliant to get that detail, rather than just a mortgage company comes back and they say, oh, we've changed this rate or we've changed this criteria, and you're trying to fill in the gaps. We work the other way around, where you start off with this is what we're hoping to achieve, whether it's more stability or more clarity for the client, and then they start to explain the changes that they're making because of it. So it's brilliant in that respect. It just means that if you not have that mindset at the beginning, then it's a bit trickier to get your head around and be motivated, I suppose, to start understanding why. But the more I've learned about the financial services world and what's happening and why things are happening, you realise how much it affects day-to-day life as well, and why certain companies even do things as well. And you start to see the domino effect, I suppose, of what's going on behind the scenes to what's happening in real world, so to speak.
I think because you need to see, like they say, it's good to get you to behind the scenes and see what really goes on, because then you can talk to customers and your clients and really understanding what goes on behind the scenes, because rather than just scratching the surface, they want to know where their investment, who's looking after the money, all those different things. And if you see behind the scenes of what's going on, then obviously you will have a far more positive effect and far more positive conversation with a client than they just sort of, well, I'm not quite sure about this, I'm not quite sure. But if you just want to go back to what, obviously we know why you chose to do this, and you're part of Openwork Academy that you're going on with this journey. So what happened? So back in May, we were talking back then. What was the process, Jim? What you decided to do it? Was it like your exam that came first, RO1 came first, or what was it what you've been through, shall we say, and what was the process over the last 6-7 months from where we were back in May?
So exam-wise, we had RO1, 2 and 3 to get through at first. I've been a mortgage advisor in the past. There's a couple more to do in the future that are more on topics that I'm a lot more familiar with. The last 6 months really have been a build up towards taking those exams, rather than just going, here's your CII Bible, as it feels, textbook-wise, and off you go read that, and then go pass this exam. They've got quite a few courses and days that we spend working through a few chapters of the book, testing your knowledge on those, and having somebody that's an expert in that exam talking you through what's likely to be questioned. So there's a lot of things in these RO textbooks that they feel just like information thrown at you, and there might not be too much purpose behind it. A lot of the courses, the reason for having them is to talk you through what information they're really trying to get you to extract from that. You don't need to know a certain date that an act came into force, but you need to understand why it came into force, what it was to deal with, and that also ends up giving you a rough estimation of when things have happened as well, with market crashes or things changing in the market in the past. So it's been brilliant in that respect to have those updates and really get to know what it is you should be looking for. So we'd have those maybe every 3, maybe 4 weeks. Once you've had a chance to absorb some of the information from these chapters and test your own knowledge. And once we'd gone through all of these courses and done a bit of a roundup, we moved on to kind of past papers and just, again, trying to understand the questioning format of the CII, because that's a whole new process in itself. Let's put it that way.
But am I right? And obviously you're used to the CMAT way of doing things, and then a slight change with institution, shall we say? So you are about getting used to the way and the questioning techniques. But is it similar sort of with RO1, similar to like CMAT 1, where with CMAT 1, whether people understand this or know this or not, but you can actually be a mortgage advisor with just CMAT 1 under a network or under a firm, and then you've got sort of 2-3 years to get CMAT 2 and 3 under your belt. You can still financial advise with RO1, is that right?
Yeah, that's right. So you've got, once we've worked through the first exam, it gives you the license to go out there and start speaking to clients. And working under the network, another one of the advantages is being able to get that advice checked, your fact finds checked, everything that we want to understand, and make sure that the client's not losing out by having that as the first exam that you've passed. And here we've managed to do it in a brilliant way, where for me it's been Jason who's been that rock at the side that can give us a second opinion and start to help me understand exactly what things will mean in the long run, which is a great asset when you come to your next exams as well. You start to understand the process from a deeper level once you're dealing with clients.
Okay, so, and like I say, it is good that you've had somebody who's gone through a similar sort of experience. It always does help when you've gone helping with and support from somebody who's living and breathing what you're trying to grow through yourself. In terms of, so I'm understanding the exams. You've got your RO1, 2, and 3, giving you your mortgage background. That's the first things you need to. In terms of like with induction courses and things like that, and mortgage brokers will be used to that. In terms of with each firm, each network, there's a new induction course and things like that going on. How does that work with full financial advising? So you've gone through the mortgage broking induction course with Openwork. That's a part of the network we're part of. How does that go hand in hand with your financial advising? Is it a totally different course? How does that work from a course point of view?
So it's similar, but what I would say for me anyway is that it was a lot more detailed on the full financial advice side. We had a few specific sessions in respect to the financial advice point of view and the systems that we use, how to use them to your advantage. I suppose you get a very formal knowledge through the exams as to what's best practice to deal with clients, but in terms of going out to see a client, you're from an exam perspective, you're just a book, so to speak. You're talking them through 3 days worth of regulation and making sure they understand all of that. Whereas people really want to know, where's my money going? What's the plan for it? What should we expect in terms of return? How does this attitude to risk is a great example. It's something that we talk about with every client. From a CII point of view, the client doesn't even really have to understand what their attitude to risk is. They just have to understand what attitude to risk segment they fall under, what they specifically then follow as a dictionary definition. Whereas when we look through the induction side of things, it's really about talking them through all of the different attitudes to risks, not giving them your own opinion as to their feelings towards it, but giving them guidelines as to if they would fall into this category, this is the typical person and personality they would have alongside it. And those small details make such a big difference to the client to be able to really understand what it is that their attitude to risk will dictate in terms of their investments.
Okay. So it's quite a bit of technical, like say, something totally different to what you've gone through before as a mortgage broker, understanding what the client's attitude to risk is, them understanding what it means. And like I say, it's very much a similar sort of thing where you've got the textbook analogy and what the requirements are. And then you've got more of a client understanding of, because like I say, it doesn't really, from the CII point of view, it doesn't really matter. Whereas from a client point of view, we want them to understand what category they fall under, why that is, and going through that sort of attitude to risk analysis with them, because clients can do that themselves. Like we've got the facility where clients can do their own attitude to risk, fill their own forms in, fill their own thing that in, comes out with them. But then it's like, well, but what does that mean? It's okay having that. Well, I fall into this category. Well, what does that mean exactly? Well, how does that differ? And that's where then you coming from your advisor point of view of then explaining more of what difference of whether you are cautious or, and all. I'm not going to list the up-team different things that they are, but it's for as long as the client understands where they sit and what difference that's going to make to them, given the fact of your advice, then that's the important part of it. So,
and it tailors to the different types of client, doesn't it? Somebody that's invested for a long time in the past and maybe used other firms in the past to broker investments for them, they probably have got a much more detailed understanding as to why all these things are happening. But for somebody that's new to the investing world, a new investor, I'm sure they felt like me, having not passed my exams at first, where you see all these acronyms and you wonder, God, what is actually going on here? I just wanted to put some money in and get some more money.
But financial advisors, mortgage advisors love doing that anyway. Love at their acronyms and stuff like that to make them feel a little bit more important. So yeah. So just, Jimmy, I appreciate you giving us an update on terms of where you're at. Are you out? Where are you at right now in terms of? So you've obviously got your R01. You're going through the process with the academy. What stage are you at now? So just to give people an idea in terms of timescales of starting out to think about doing this to then actually seeing clients face to face. What step are you at right now?
So having done my exams, we're just waiting for the FCA registration stuff to come back, which always takes a little bit of time.
The good old FCA registration.
Yeah, that's again another bundle of fun. Let's put it that way. But no, so we've got a bit of a delay on that front, waiting for these things to come back. But I'm ready to go out and see customers, which is great. And we're now in the next stage of exams where it's starting to look at a few more specifics. Pension drawdowns, protection stuff. Again, I'm sure very interesting for the average individual, but the things that are a little bit closer to home and a lot of knowledge that I've already picked up from some of these past exams. So these ones give you a slightly wider range of timescales before you have to look to get those passed, because it's only slightly limiting the business that you can do. And again, we've got these great assets that we can talk to and deal with in the time being through Openwork. For any cases that do require that specific advice for the specific part of advice that we can work through as well. So I suppose in broad terms, we're in a great spot, having just to wait for these couple of bits to come back from the FCA, and then I'm going out on the road again if COVID allows, to get kind of building up the client base in a whole new realm of the business.
Definitely. I think you'll find, COVID allowed, absolutely. But I think what we find as a firm, and funnily enough, I was talking to one of the other financial advisors about this before we've recorded, was about, generally speaking, it is done more face-to-face. Financial advising, the pensions, investment stuff is more, people want to meet, or people want to have that face-to-face appointment. So yes, we've got the technology, absolutely. But I think they found, and other financial advisors I know found, that they've used technology, but they cannot wait to get back on and see clients face to face. And clients feel the same way as well. If they're trusting these people with big investments, looking at futures, future plan, all those sorts of things, they do want to meet up with somebody face to face rather than a voice on the phone or somebody sat on Teams or something like that.
And you can understand that, can't you? I think just as we as advisors want to make sure that the client understands everything and has everything they need in front of them, clients will often feel the same way. And it is a lot more detail that we're working through and a lot more time. So from our perspective, it's often easier even just to pick up on some body language cues or whatever it may be if a client just needs that extra bit of info, but has maybe asked 15, 20 questions in the past. It helps to feel them more relaxed to just ask another. And that's what we're there for. We're people at the end of the day, and sometimes being sat with them rather than on the other end of a computer screen helps to emphasize that point and help them to come forward and just ask what they need to ask to really feel comfortable about what we're doing.
Definitely. And then finally, Jamie, just thanks for the recap. But just we're sat here end of November 2021 after quite a big change for you this year in terms of what your career out looks like. What's the plan for 2022? You don't have to give us a massive thing, but like just what's the plan? Where is this all heading?
I think for 2022, I mean, we touched upon it in the first podcast that this year is more a focus on the learning side of things, which has been a big change from the world of trying to make sure all my clients and all the new business out there is coming straight through me. And I've maybe had to take a smaller step back from that while to give myself a bit more time to focus on these exams. So it's really getting back to it, which I can't wait to be out there as often as I can and trying to build up a whole new client base. Really, I've got a lot of existing clients that are in the market for the investment side of things, but it's just like the mortgage world. Once you've dealt with it at first, you've got to leave it a year before we're kind of going back and changing things a lot of the time. So it's going to be putting my name back out there and getting the clients back sat in front of me and listening to me for a couple of hours, which is my favorite activity, listening to my own voice. So I'm really looking forward to kind of pushing that side of the business and being able to depend on a new type of business, not just the mortgage side, not just depending on the housing market being open, but being able to look at the wider picture.
Definitely. And I think you will change from the financial advisors I talk to who move from mortgage broking to financial advising. They just look at things slightly differently from a business point of view. So no, good. I'm looking forward to working with you 2022 and just sort of seeing the success and putting up all these foundations and all the hard work and the study from this year and seeing sort of your financial advising business grow, Jamie. I'm looking forward to working with you that and seeing your, like I say, the success that no doubt that will bring in 2022. So, Jamie, thanks very much for coming back onto the podcast and sharing your experiences here today. We'll get back on next year, not to talk about Manchester United managers, but maybe just get you back on, just sort of see where your advising is then going and how you found that when you now actually you've gone through the academy and the training, the qualification, you're now sort of getting out there. We can do with a catch up and sort of sharing your experiences from that point of view. So, but Jamie, thanks very much for your time today.
Thank you, Craig. I appreciate it and can't wait to have another chat in a few months' time and tell you how it's all going.